2025 has been an interesting year for the economy, with tariffs making people worried about inflation again, with DOGE reducing waste and laying off many federal employees, and of course, artificial intelligence and new technologies causing markets to go wild. And this makes it a very unique time to be an investor. All of these economic changes create uncertainty. And for most people, that uncertainty creates fear and panic. But for financially savvy investors, that same uncertainty can create a profit opportunity. And that's why in this video, I want to show you how you can build wealth through all this uncertainty by understanding 5 steps. Number 1, knowing how to get your money in order by having a money system. Number 2, building an investment system. That way you can capitalize on opportunities. Then number 3, understanding how you can actually build a passive investing system. Number 4, understand how you can build an active investing system. And then number 5, knowing how do you actually win. Make sure you stick with me till the end, that way you understand how you can actually win through craziness in the markets. So let's get started here with number 1. If you found an amazing investment opportunity later today, you would need money to actually take advantage of this investment opportunity. And the problem is, most Americans don't even have $1,000 saved up to protect them against an emergency, let alone $1,000 to be able to take advantage of a great investment opportunity. So you don't even need to worry about thinking about how do you find good investment opportunities until you have the actual money to capitalize on those investment opportunities. This is why you want to start by having a system for your money, meaning you want to get your money in order. And a very simple thing that you can do is create a system like 75, 15, 10. This way, anytime you make $1, it's gonna flow into this system. Which means if you make $1, 75 cents is the maximum that you can spend. 15 cents is the minimum that you invest. 10 cents is the minimum that you save. Now you have a system where when you make money, you're automatically putting money aside to save, you're automatically putting money aside to invest, and you're automatically putting some money aside to spend. That way you don't accidentally spend all your money at Benihana's and you have no money to take advantage of this great opportunity. I want you to have this money put aside so you have the opportunity to take advantage of this great opportunity. Now I know what you're gonna say. Well, Jaspreet, don't you know what's going on? Haven't you seen inflation? Incomes haven't kept up. How do you expect me to do this? Look, here's the reality. Things are not magically gonna get easier next year, or the year after that, or the year after that. This is what's going on. We know life is expensive, and we know life is gonna continue to get more expensive. The Federal Reserve Bank doesn't wanna see negative inflation, they wanna see 2% inflation. We're not even there yet. That means the prices of things are going to continue going up, just maybe not as fast as it was before. So, yes, it's going to be difficult, but you can either make the sacrifice now or deal with an even more painful sacrifice in the future. If you don't know how to live below your means, you're never going to be able to build wealth. The way you build wealth is by having money to invest, period. Until you can do that, you don't even need to worry about anything else I'm going to talk about in this video. But you have to have money to invest first. That way you can actually take advantage of this great opportunity. That means you got to work to spend less money. You got to work to earn more money. That way you have the money to actually invest. And yes, that takes sacrifice. Now I know I didn't go too deep in how do you build a financial system with how do you allocate your money after you get paid in this video, because I have multiple videos on my channel where I went over that. I will link a video on how do you actually use your paycheck to build wealth down in the description if you want to learn more about that. Because in this video, I want to talk more about how do you actually take advantage of those investment opportunities by knowing how to invest your money. So let's talk about number 2. How do you build an investing system? Now, there's a whole lot of ideas of how you should be investing your money with all the crazy things happening, from DOGE to tariffs to artificial intelligence to all the other economic policies. And this is one of the reasons why on March 11th, 2025, I'm hosting a free, live, and virtual wealth building workshop where I'm going to go over number 1, what are all the changes that we're seeing happen? And then number 2, how do you take advantage of these opportunities? How do you take advantage of all the economic changes that we're seeing happen? And how do you take advantage of all those changes that are happening right now? It's a free workshop and it's a live workshop. I'm doing it twice on March 11th, one in the morning at 10:30 a.m. Eastern Standard Time, and then again in the evening at 8 p.m. Eastern Standard Time. So if you want to join, again, it's free, but you do have to reserve your spot because our software has a limited number of people that can actually join me live. So if you want to join, I got the link for you down in the description below. So now I'm assuming that you're actually putting money aside to invest, and you have this money to invest because this is how you're going to build wealth. Now, when you have this money, the question is, how do you actually take advantage of this great opportunity? Because the mistake that so many people make is they say, well, what stock should I buy? And then they just dump their money into something that they hope is going to be the next Nvidia, the next Tesla, the next Amazon, and then they end up losing money. because they don't know what they're doing. They don't have a strategy. And this is where now we're going to talk about how do you strategize this investment money right here. We talked about how do you strategize your money. Now let's talk about how do you strategize your investments. I like to break this up into two different parts. You could either be more of an active investor or you could be more of a passive investor. Notice how I said investor. I'm not talking about trading. Trading is not what I do. I don't understand trading. I'm talking about long-term investing, meaning holding your investments for at least a year, ideally many years, and even more ideally, many decades. This is what long-term investing is. But now when it comes to actually implementing this long-term investing, there's a lot of ways to do it. Let's talk about passive investing. Passive investing is now you're not going out and investing in Tesla. You're not going out and investing in Nvidia. You're not going out and investing in Apple. Instead, what you're doing is you are going to invest into a basket of companies. Now maybe this basket of companies has shares of Apple. Maybe this basket of companies also has shares of Amazon. Maybe this basket of companies also has shares of McDonald's and hundreds of other great companies. But instead of you trying to find the next Apple or Amazon or McDonald's, you were just investing in a piece of this fund. And it's going to be passive, meaning you set up a system every week, every 2 weeks, every month, and you set it and forget it. But now, instead of investing in an individual company, you're investing in a fund which automates it. For example, there is a fund called the S&P 500. This is a group of the 500 largest companies in the stock market. And you can invest directly into this fund. You don't have to go out and worry about managing those 500 companies or finding those 500 companies. You just invest into this fund. And now if one of the companies goes bankrupt, let's just say Apple goes bankrupt. Well, now this fund will automatically kick out Apple and they'll replace it with a new company to replace Apple. That's why it's considered passive investing, because you're not the person that's managing the portfolio. The fund is managing it for you. You just invest in the fund. You can compare that to being an active investor. Now, being an active investor is you're going to go out and try to find the right company. Maybe you're going to go out and invest in something like Apple. Maybe you're going to go out and invest in something like McDonald's. Maybe you're going to go out and invest in something like Amazon. Again, I'm not telling you what to invest in. I'm just giving you an example. But now you are the manager. You have to keep up with the company. You want to listen to the earnings calls. You want to be studying the financial statements. You want to be studying everything that the company is doing to make sure that your investment is still a good investment. This takes more work. It also comes with more risk. Because now, if you invest in Apple and Apple goes bankrupt, you lose everything. Here, if Apple goes bankrupt, yeah, it might hurt the portfolio, but it's balanced out by the other 499 other companies in there. So this active investing comes with more risk, more potential return. This passive investing comes with less risk, less potential return. But this passive investing also takes much less time, much less work. This active investing takes more work, more time, more research, more energy. Which one's right for you? That's going to be up to you to decide. I have a passive investing strategy and an active investing strategy. You have to find what's right for you, because you never want to blindly follow a random guy on YouTube. And I should also let you know that investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. So now that we've laid down the foundation of how you can manage your money and how do you invest your money, let's talk about how do you actually invest your money with all the changes that we're seeing happen in the economy right now. We're going to start with the passive system, and then we're going to go even deeper into how do you take advantage of some of these shifts as an active investor. But let me start with how do you do it as a passive investor. Now again, as a quick recap, the first thing that you're doing is creating a system for your money that we are always investing some money. Maybe you follow something like 75, 15, 10, which says for every dollar that you earn, you're investing 15 cents. So you have a money system to always have money to invest. Now you create an investment system. Let's assume for the purposes of this example that you decide, I don't want to be an active investor. I don't want to have to deal with reading financial statements or keeping up with companies. I just want to be a passive investor, which means now you're allocating some money to invest and you want this money to be passively invested. Let me show you what that looks like and how you can win in this type of economy. The way you win as a passive investor is this money that you're allocating for investments automatically gets invested into what you think the good opportunity is. Now there's many different ways that you can invest into this good opportunity. You can invest into the economy, or you can invest into more niche opportunities. Let's talk a little bit broader by investing into more of the economy, because the reality is we know that markets go up and markets go down. And what we have seen is that over the last 100 years, the S&P 500 has gone up by around 10% a year, despite the fact that we have seen 16 recessions over the last 100 years, which means we're averaging more than one recession per decade in the United States. Not just that, we have seen 25 bear markets in the last 100 years, which means we have seen more than 25 down markets in the last 100 years. But despite that, the S&P 500 has grown by an average of 10% a year. Now, history is not an indication of what you can expect for next year, but what this tells us is if you just want to be a passive investor, one of the simplest things that you can do is just invest in the American economy. Investing in something like the total stock market or investing in the S&P 500. Again, I can't tell you what to invest in, I'm just giving you examples. But now what you're doing is you're just investing in the broad American economy and you just want to invest for the long term. And now you follow a strategy that I like to call ABB, always be buying. And you do this every week, every 2 weeks, every month. So every time you get paid, this money is automatically invested into whatever thing that you want. Now, this is where you got to find what is the right fund for you. I'm going to give you a couple examples. If you want to invest in the total stock market, VTI is an ETF that gives you exposure to the total stock market. If you want to invest in the S&P 500, SPY or VOO are both ETFs that give you exposure to the S&P 500. As a small disclaimer, I'm personally invested into VOO. Again, I can't tell you what to invest in, but what this gives you exposure to now is the broad United States economy, whether it's the total stock market or the S&P 500. And now you take this money that you put aside and you can automatically invest this money. There are many brokerages that will do this for you. You pick which ETFs, which index funds, which funds you want to invest in, and then you automate it. So you figure out how much money you want to allocate every week or every 2 weeks, every month, and then you just let the markets do their thing. Now I said, well, how do you invest your money passively through all this craziness? Well, if you're a passive investor, none of the craziness matters. You follow ABB, always be buying. Always means you buy if Trump is in office, you buy if Biden is in office, you buy if Obama's in office, you buy if it's a Democrat or a Republican, you buy if it's raining, you buy if it's snowing, you buy if it's up, if it's down. Always means always. And you do this for the long term. When the markets crash, you keep buying. When markets are up, you keep buying. That's what always means, is you're buying no matter what, and that's how you win, by doing this for the long term. You buy every week, every 2 weeks, every month. You do it for the long term. That's how you win. And by long term, I mean many years, if not many decades. That's how you build wealth as a passive investor. That was the easy part. Now let's talk about how do you actually build wealth as an active investor through all the changes that we're seeing happen right now. This one is a little bit more difficult because now you have to put in real work to find a unique opportunity for you. Again, this is not for everybody. This is for the people that are willing to take on the higher risk, that can afford the higher risk, and are interested in putting in the additional work and additional research. This is not for most people. So now, what you want to look for is what I like to call a market shift. You want to invest where the money is going, not where the money has been. Because Sears was the world's largest retailer. But as the internet became more popular, they didn't innovate, and then they went bankrupt. If you invested in Sears because you thought, hey, they're the world's largest, and now they're gonna be the behemoth forever, well, you would have lost everything. That's why you want to know where the money is going, not where the money has been. And now when you see all these changes happen in the economy, from tariffs to DOGE to AI, what you want to understand is how these things create an economic opportunity. More specifically, how does it create a market shift? I'm going to give you a few ideas. I'm not going to tell you what to invest in, but I want you to start thinking like this. Here are a few ideas so you can start thinking like an investor and start understanding how to look for market shifts. Artificial intelligence is growing extremely fast, and we're seeing a lot of things happen in technology. Well, artificial intelligence uses a lot of data, uses a lot of information, and this data is stored in data centers. Well, if artificial intelligence continues to grow, there's going to be more energy needs, there's going to be more data center needs, which could create a potential investment opportunity. What are those opportunities? Well, I'll leave that up to you, but maybe you could be looking at artificial intelligence companies, maybe data center companies, maybe energy companies that are supplying the energy to the data centers used by artificial intelligence. Number two, President Trump has talked very openly about how he wants the government to continue to invest in space exploration. Well, there are a lot of private companies out there that could be receiving grants or funds from the United States government to continue investing in space exploration, which means if they make more money from the government, they have the ability to potentially make more revenue, potentially more profits. Number three, Trump has talked a lot lot about tariffs. Well, what do tariffs mean? The goal of tariffs is to bring more manufacturing back to the United States. Let's assume that that happens. If more manufacturing happens in the United States, there could be more plants and more manufacturing facilities in the United States, which means that more stuff would have to transport from one facility to the other in the United States. If that ends up happening, well, the logistics companies, maybe the railroads or the other transportation companies, could see a benefit because now there's more domestic manufacturing happening and more products have to be shipped or transported from one place to the other in the United States. Number 4, let's talk about government technology because government technologies are extremely dated. And one of the things that DOGE is working on is making the government more efficient. And they've talked about wanting to upgrade the government technology infrastructure. And there are certain companies that are contracted by the government to improve their technologies. So if the government now wants to improve their efficiencies and they start investing more into the technologies, those tech companies that are contracted by the government could see huge contracts to improve the technologies that the government uses. And let's talk about financials, because President Trump has talked about how he wants to deregulate financial services. That's Wall Street companies. If we see more of the deregulation of these Wall Street companies, they'll have the ability to do more stuff without as many rules, which means they could potentially make more money. They could potentially make bigger profits. Now again, this is just the beginning. These are shifts. These are shifts which means they could drive more revenue into this industry. Once you identify a shift, now you can start digging a little bit deeper. Now you can start digging into the companies. And you can say, okay, I find one of these shifts interesting. Now I'm going to start looking at these companies inside of this shift. And now you want to find the right company for you to invest in. Because not every company in a shift is going to see benefits. Some companies could be managed by a horrible CEO. They could be mismanaging their funds. And they could run themselves into the ground. And this is where now you want to dig into the company's financials. This is where now you want to dig into what the company is doing to innovate, that way they're not losing to all their competitors. That's the way you win, is you understanding the market shifts and they look for the companies. Again, more risk, more potential return. And this is what I'm going to be going over on my wealth building workshop on March 11th to number 1, understand what are some of these shifts that are happening, how do you analyze the companies, and how do you actually take advantage of those opportunities. Again, if that's something that you're interested in, I got the link for the workshop for you down in the description. So now we talked about how do you build a system so you have money to invest. Once you have money to invest, we talked about how do you come up with an investment system for you. Do you become a passive investor or active investor? Then we talked about how do you win as a passive investor by following something like ABB, always be buying into a broad basket fund. Then we talked about how do you win as an active investor, especially during these times of crazy economic changes, because these create a ton of market shifts. It takes more work, more risk, but also more potential return if you can identify a unique market shift and then a unique potential investment opportunity there. This brings me to number 5, how do you actually win? Because the reality is there's risks with anything that you do. I talk about how there's risks when you invest your money. There's also risks when you don't invest your money. But what I want you to understand is you could be wrong. And this is where you want to know now, what do you do and what are some of the risks that are at play? Because the mistake that so many people make is they say, I'm going to be an investor. Whether it's a passive investor or active investor, it does not matter. You say, I want to be an investor, and then you start putting some of your money into the markets. Doesn't matter which asset you're talking about. And then markets start to go down. And then what ends up happening is you start reading the news. And unfortunately, a lot of the traditional media is in the business of selling hype, emotion, fear, instead of actual financial education. This is one of the reasons why I've been so adamant on building market briefs and briefs media as a way for you to get real unbiased financial news, but that's a separate point. And that can create a lot of fear when you start reading news about things going wrong. And this creates a lot of people to freak out and sell stocks or sell investments when they shouldn't. And this is where the way you win is you have to be able to separate out the emotion from the financials. If something is seriously wrong and you're invested into a company that's on the verge of bankruptcy, then yeah, you want to get out. But if markets are just going down for whatever reason, maybe you enter a recession, maybe it's a market pullback, maybe it's a market crash, those also create great buying opportunities. And this is where you have to learn to stay calm and you have to be able to find those opportunities. But it requires you to understand the game. Remember, I talked about this in the beginning of the video. Market crashes are a part of our system. Recessions are a part of our system. Most people get blindsided when they happen. But the financially savvy are prepared for when they happen. And so the way you win is to be prepared for anything. And the way you're prepared for anything is, number 1, you have to be emotionally prepared to understand that, yes, investing can be a roller coaster with your money, but also your emotions. And then number 2, you have to be financially prepared. which is if and when that downturn happens, you want to be able to capitalize on that downturn. That means being able to come in and buy good investments at a discounted price. So having some extra money again to be able to come in and deploy more cash, more capital, that way we can come in and invest more aggressively and be able to ride the wave on the way up. It doesn't mean the markets are going to go straight up right away. It could take years. But if you can find an opportunity to buy great investments at a discounted price, it can allow you to amplify your wealth a whole lot faster, and that's how you win as an investor, especially when you go through these types of volatile markets. So when you go through these types of crazy economic changes, some people freak out. A few people, the minority of people, look for the opportunity. That's what I want you to do. You have no money in case your car breaks down. You have no money to pay for your health insurance, and I'm assuming that you're putting no money aside to invest, to build your wealth. Now you can start to see the problem. Now here's the real catch that most people don't learn until it's too late. It's not your income that will determine if you become wealthy or not. It's what you do with your income.